Welcome to Alpha Recap. We're wrapping up today's market action with a look at big post-earnings moves, AI optimism, and a few private market surprises. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to unpack from a pretty dramatic day.
Markets closed up after a cautiously bullish open, driven by optimism about a potential Iran deal and concentrated buying in AI and semiconductor leaders. So, walk us through the headline winners and losers.
Sure, the day was really defined by earnings-driven volatility. We saw several consumer-facing names gapped down hard, and then other names rallied on better-than-feared results. It felt very company-specific.
Yeah, that tracks. Let's start with the headline drops. Shake Shack plunged about 30% after reporting an operating loss and blaming winter storms and a faster store opening plan.
That was a brutal repricing. Management flagged near-term pressure, and markets quickly remodeled profitability. Growth versus margin really hit home there. Faster openings can compress operating leverage, and investors punished the uncertainty.
Planet Fitness fell about 29 to 30% after it cut guidance and canceled planned membership price increases. So, what did that say about pricing power?
It was a clear signal that assumed pricing power was weaker than expected. In membership models, a price change flows into recurring revenue immediately, so canceling hikes raises red flags about the business's ability to sustain margin expansion.
On the flip side, cybersecurity names and some AI-adjacent companies had good days. Fortinet reportedly rocketed higher after results that tamped down fears that AI would cannibalize its franchise.
Right. Fortinet's beat suggested that AI may actually increase demand for security. More tooling, more complexity, more attack surface to defend. Analysts noted that AI could be a demand accelerator rather than a pure threat here.
Peloton also rallied after beating revenue estimates and citing higher subscription prices as a driver. The company reported revenue north of $600 million and an earnings per share swing versus last year. Interesting contrast to Planet Fitness.
Exactly. Peloton showed pricing power and an ability to monetize subscriptions, which reverse part of the narrative. That's a great example of why pricing moves are now a major differentiator across consumer businesses.
DoorDash produced a weird disconnect. Mixed results in outlook, yet the stock rallied strongly in pre-market trading.
Yeah, that one underscored the debate between fundamentals and sentiment. Sometimes a growth narrative or momentum can outweigh a single quarter beat or miss, at least in the short term.
Let's hit the private market side. Lincoln's private market index fell about 2.2% in the first quarter, driven largely by an approximately 8.8% slide in software.
That was a notable signal. It suggests sector-specific mark pressure inside private assets. And then Blue Owl's funds cutting dividends, and one selling half its SpaceX stake ahead of the IPO, really flagged liquidity and payout stress in parts of private credit.
Shell CEO also warned the oil market was short roughly 1 billion barrels given Iran tensions, and Shell reported first quarter profit of about $6.9 billion. I mean, that geopolitical flashpoint clearly moved energy sentiment.
Geopolitics can instantaneously change sector trajectories. If that shortfall persists, it would tighten supply and support higher commodity prices, which matters for energy sector earnings.
Let's step back and synthesize. What are the cross-cutting themes you took away?
First, earnings were the dominant short-term driver, and they produced bifurcated outcomes, some shockingly bad, and some narrative-reinforcing beats. Second, AI, semiconductors, and cybersecurity remain the structural bullish anchor. Third, pricing power is under fresh scrutiny and is dividing winners from losers.
Right, and the fourth point is private market and liquidity signals flashing caution. And the fifth is that geopolitics can suddenly recenter sector allocations. Yep.
Exactly. Those 5 themes are connected: headline volatility, concentrated leadership, pricing scrutiny, private credit stress, and geopolitics all interact and can amplify each other.
We should dig into the debate around AI. Some argued AI might undercut incumbents, but Fortinet's results suggested AI could boost demand for security. So which is it? Disruption or tailwind?
It's both, depending on the vendor and product. For some legacy tools, AI could displace features. For security vendors, AI often increases complexity and attack vectors, which drive spend. The key is product differentiation and recurring revenue durability. When you step back and look at this, AI deals can serve as revenue levers for both infrastructure and software vendors. But you want to see quantifiable usage or revenue guidance to be convinced it's durable.
Let's talk private credit pain. Blue Owl cutting dividends and selling a pre-IPO stake? That felt like a warning sign.
It was. Dividend cuts are liquidity management moves. When funds sell stakes early or reduce payouts, it raises questions about NAV realizability and distribution sustainability for yield-seeking allocations.
Short reactions.
Wow.
Right. Okay, implications by investor type. For short-term traders, post-earnings volatility creates setups, but also big risks. For growth and AI-focused investors, the read-throughs on Anthropic SpaceX IA and infrastructure leadership matter a lot.
Yeah, and for income and yield investors, the Blue Owl moves were a reminder to scrutinize payout sustainability in private allocations. Value and cyclical investors should be watching oil forward curves and inventories after Shell's comments.
Long-term allocators. Lincoln's 2.2% first quarter decline and software's near 9% slide remind us that private valuations don't always move in lockstep with public markets.
Right. Benchmarking and stress testing mark-to-market assumptions when you're raising capital or planning exits is more important now.
Let's give listeners a short watch list of practical items to monitor.
First, earnings calendars and guidance sensitivity. Don't just focus on beats, watch what management says about the future. Second, pricing power indicators, churn, average revenue per user, and new customer acquisition in subscription models. Third, AI partnership announcements that include quantifiable revenue or usage metrics.
And fourth, liquidity and payout health in private assets. Watch for dividend edits, secondary sales, and NAV revisions. Fifth, geopolitical and commodity signals. Strait of Hormuz developments, inventory reports, and company-level production guides.
Exactly. These are the monitoring triggers that help map scenarios to position sizing rules, rather than taking a binary stance.
A couple of quick clarifications for listeners. When we say markets closed up, that was after concentrated buying in big AI and semiconductor names. And the consumer membership stories were punished quickly when guidance or pricing moves disappointed.
Analysts noted that the market was reactive to both earnings and geopolitical flow. Whether sentiment-driven rallies broaden or reverse will determine the next leg of market leadership.
So, final takeaways, concise and practical. Number 1,
Earnings dominated the tape and produced big winners and losers. Plan for scenario-driven outcomes tied to guidance.
Number 2,
AI, semiconductors, and cybersecurity remain the structural anchors, but you need quantifiable adoption metrics to justify higher multiples.
Number 3,
Watch pricing power closely in membership and subscription businesses. It's a key differentiator right now.
and number 4.
Private market liquidity signals are flashing caution. Dividend cuts and secondary sales deserve attention for income and long-term allocators.
All right, that wraps up our recap. If you want deeper charts or the data behind today's discussion, check our post at stockalpha.ai.
And if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next round of earnings. Until then, keep an eye on guidance, pricing moves, and any big geopolitical headlines. Take care.